Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We're going to find out more now about alternative beta ETFs with our ETF research director, Nina Mishra, who joins me here. So these are becoming more popular.
These are becoming popular. So just a little bit of background. Traditionally, the ETF industry has been dominated by market capitalization weighted index. And they are fine. They kind of represent the market or a particular segment of the market. And the ETFs tracking those indexes just replicate the market returns or the returns of a particular segment of the market. And they do it at a very low cost and in a convenient and transparent manner. Then there are some investors who believe that it is possible to beat the market by superior stock selection, and they go with the active management, actively managed ETFs. And these actively managed ETFs are a little bit more expensive, and they do not always justify, the performance does not always justify their costs. There is a middle road also, ETFs that follow the indexes that are not market capitalization weighted. So they combine the benefits of active and passive investing. They try to beat the market, but at a cost much lower than active management. They are already very popular with institutional investors. Retail investors are not so familiar with these alternative beta indexes, but they are rising in popularity.
Okay, so what exactly is the alternative or the smart beta?
Yeah, they are called smart beta, and many analysts do not agree with the word smart, because if these are smart, then all others are dumb or what? They are also known as alternative or advanced beta ETFs or indexes. So they basically start with the same set of stocks, but instead of weighting the stocks according to their market capitalization, which typically gives very high weights to big overvalued companies, these ETFs or indexes, they weight the stocks on the basis of certain fundamental measures. And they try to select stocks and rank stocks that are likely to deliver better risk-adjusted performance. That is why they are becoming more popular with investors, because they are try to perform better than passively managed ETFs, but at a cost lower than actively managed ETFs. And these strategies range from very simple equal weighted strategies to volatility or momentum based strategies to strategies based on certain fundamental measures, and there are some very complicated strategies too. So for investors who are beginning to follow ETFs based on these strategies, it is better to begin with certain simpler and more transparent weighting strategies.
Okay. You have a couple of examples?
Yes. So today we'll cover two fundamentally weighted indexes.
Okay.
They are from a company called Research Affiliates. So they are called RAFI, fundamentally weighted indexes. They select and weight stocks according to certain fundamental measures, mainly four fundamental measures: book value, cash flow, dividends, and sales. So the companies or stocks that rank high on those scores, they are selected and they are given higher weight in the indexes.
I see.
So for investors, there are two options available for ETFs following these fundamentally weighted indexes. I have two examples here for investors who want to track the performance of large cap stocks. We have PowerShares FTSE RAFI US 1000 portfolio. The ticker is PRF. And for investors who want to invest in smaller and mid cap stocks, there is an ETF called PowerShares FTSE RAFI US 1500 small mid portfolio. The ticker is PRFC.
So let's take these one at a time. How does the PRF compare with other indexes?
So I have a chart here of comparative performance of PRF, 5-year comparative performance with the Russell 1000 index ETF and S&P 500 ETFs. So those Russell 1000 and S&P 500 index ETFs, they follow the market cap weighted strategies. And this ETF, as you can see from this chart, has been consistently beating these two market cap weighted ETFs.
And then the PRFZ?
Yeah, this tracks the smaller and mid-cap companies, and I have compared the performance, the 5-year performance of this ETF with the Russell 2000 index ETF and the S&P 500 ETF. So here you can see that this ETF has also been consistently beating the market cap weighted index ETFs.
Okay, interesting stuff. Do you own either of these two?
No, I don't.
All right, you can check out other ETF articles and ETF-related education in the ETF section of Zacks.com. If you're not there already watching this video, get on over, link to it right off the home page. With Nina, I'm Terry Ruffalo.